Preparing for Investor Services at MUFG Investor Services interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What do you know about MUFG Investor Services, and why are you interested in this role? MUFG Investor Services supports investment managers with fund administration, accounting, investor services, middle office, and reporting solutions. What attracts me is the combination of technical fund work and client-facing responsibility. I enjoy roles where accuracy, deadlines, and controls matter every day. I also see MUFG as a platform where I can build deep exposure across hedge funds, private equity, and complex products, while developing strong operational discipline. While answering, focus on MUFG Investor Services' role in fund administration, asset servicing, reporting, and technology-enabled client support. Connect your motivation to accuracy, controls, client service, and career growth. Question 2. Walk me through how you would calculate a fund's NAV. NAV is the fund's net asset value after all assets and liabilities are properly recorded. I would start with positions and cash, price the portfolio, book trades, accrue income, record expenses, and include investor subscriptions or redemptions. Then I would reconcile cash and positions to custodians or prime brokers, review unusual movements, and calculate NAV per share. The key is not just calculation, but controlled, explainable, and deadline-driven reporting. Make sure to cover assets, liabilities, pricing, income accruals, expenses, cash, investor activity, and unit or share calculation. Emphasize review controls, reconciliations, and the importance of timely NAV delivery. Question 3. How do subscriptions and redemptions affect investor services and fund accounting? Subscriptions and redemptions directly affect both investor records and the fund's NAV. For a subscription, I would confirm documentation, KYC approval, cash receipt, and the correct dealing date before issuing shares or units. For redemptions, I would verify eligibility, lockup restrictions, fees, and payment instructions. Accounting then reflects the capital movement in NAV. Strong coordination matters because investor activity impacts ownership percentages, allocations, and downstream reporting. In your answer, talk about investor dealing dates, cash receipt, AML KYC clearance, share issuance or cancellation, allocation of profit and loss, equalization, and communication between investor services and accounting teams. Question 4. A cash reconciliation shows a break between the administrator and custodian. How would you investigate it? I would first identify whether the break is opening balance, current day activity, or closing balance related. Then I would compare transactions line by line against the custodian, looking for timing differences, unsettled trades, fees, interest, FX, or missing cash movements. If it is explainable, I would document it clearly. If it is unexplained or material, I would escalate quickly, because unresolved cash breaks can affect NAV accuracy and client confidence. Be sure to mention comparing transaction-level activity, timing differences, unsettled trades, bank charges, FX movements, corporate actions, and prior day breaks. Show a structured approach and clear escalation discipline. Question 5. Explain the trade lifecycle from execution to NAV reporting. After a trade is executed, it is captured in the accounting or middle office system and matched against broker confirmations. The trade then moves towards settlement, affecting positions, cash, realized gains or losses, and potentially accruals. Before NAV, positions and cash are reconciled to external sources, and prices are validated. Once everything is reviewed, the trade's economic impact flows into the fund valuation. Clean trade processing is essential for accurate NAV production. While answering, focus on trade capture, confirmation, settlement, position updates, cash impact, pricing, reconciliation, and NAV inclusion. Link each stage to risk reduction and operational control. Question 6. How are management fees and performance fees typically calculated in fund administration? Management fees are usually calculated as a percentage of assets, commitments, or invested capital, depending on the fund documents. Performance fees or incentive allocations are more sensitive because they may involve high watermarks, hurdles, loss carryforwards, and crystallization dates. I would never rely on a generic formula. I would review the offering memorandum or LPA, calculate at the fund or investor level as required, and make sure the fee accrual ties into NAV. Make sure to cover fee base, fee rate, accrual frequency, high watermarks, hurdles, crystallization, investor level calculations, and review against fund documents. Avoid assuming all funds use the same structure. Question 7. How would a corporate action impact a fund's NAV process? Corporate actions can affect positions, cash, income, and valuation, so they must be captured accurately before NAV is finalized. A cash dividend increases receivable income and later cash. A stock split changes units, but should not change total market value. A merger or spin-off may create new securities and pricing challenges. I would verify details against custodian or market data, confirm accounting treatment, and ensure the NAV impact is reasonable and fully documented. In your answer, talk about dividends, splits, mergers, spin-offs, elections, income accruals, position changes, cash movements, and custodian confirmation. Mention both mandatory and voluntary corporate actions. Question 8. What are the key differences between hedge fund accounting and private equity fund accounting? Hedge funds typically have more frequent NAVs, liquid securities, subscriptions, redemptions, and daily or monthly reconciliations. Private equity funds are usually closed-ended, with capital commitments, capital calls, distributions, carried interest, and less frequent valuations. Hedge fund accounting is often position and price intensive, while private equity accounting is more investor allocation and waterfall focused. At an administrator like MUFG Investor Services, understanding both helps support different client strategies and reporting expectations. Be sure to mention liquidity, valuation frequency, investor capital structure, realized versus unrealized activity, capital calls, distributions, equalization, and reporting timelines, showing awareness of both product types. Question 9. What controls would you expect in a strong NAV production process? A strong NAV process has controls at every stage. I would expect daily or period-end cash and position reconciliations, independent price checks, expense and accrual reviews, and variance analysis against prior NAVs or benchmarks. There should also be maker-checker approval, clear materiality thresholds, and documented sign-offs. The goal is to catch errors before release, create an audit trail, and give clients confidence that the NAV is accurate and defensible. While answering, focus on maker-checker review, independent pricing, cash and position reconciliations, tolerance checks, expense review, variance analysis, approval workflows, and documented evidence for audit and client review. Question 10. What is your understanding of KYC and AML in investor onboarding? KYC and AML are about knowing who the investor is and ensuring the fund is not accepting money from prohibited or suspicious sources. In onboarding, I would expect verification of identity, beneficial ownership, source of funds, tax documentation, and sanction screening. Higher-risk investors may require enhanced due diligence. From an investor services perspective, incomplete KYC can delay dealing, so accuracy and timely follow-up are critical for both compliance and client experience. Make sure to cover identity verification, beneficial ownership, source of funds, sanctions screening, risk rating, ongoing monitoring, and why incomplete onboarding can delay subscriptions or create regulatory risk. Question 11. How would you approach pricing a security that does not have an easily available market price? For hard-to-price securities, I would follow the fund's valuation policy rather than making an ad hoc judgment. I would check the pricing hierarchy, use approved sources such as broker quotes, models, or valuation agents, and flag stale or unusual prices. If the impact is material, it may need manager input or valuation committee review. The important point is consistency, independence where possible, and documentation supporting the price used in NAV. In your answer, talk about pricing hierarchy, broker quotes, valuation models, stale prices, liquidity, fair value policies, valuation committee review, and documentation. Emphasize independence and consistency. Question 12. What steps would you perform during a month-end fund accounting close? At month-end, I would make sure all trades are booked, positions and cash are reconciled, and prices are loaded and reviewed. Then I would accrue income, expenses, management fees, and performance fees if applicable. Investor subscriptions and redemptions must be processed correctly before NAV allocation. I would review profit and loss, investigate large variances, clear outstanding breaks, and prepare client reporting. A good close is accurate, controlled, and completed within the agreed timetable. Be sure to mention booking final trades, reconciling cash and positions, pricing investments, accruing income and expenses, processing investor activity, reviewing profit and loss, preparing reports, and resolving open items. Question 13. If you discovered a NAV error after the NAV was released, what would you do? I would not try to fix it quietly. I would escalate to my manager immediately, quantify the error, identify the affected NAV date, and assess materiality under the fund's error policy. Then I would help determine whether investors were impacted and whether a restatement, compensation, or disclosure is required. After correction, I would document the root cause and strengthen the control that failed. Speed, transparency, and accuracy are critical in this situation. While answering, focus on immediate escalation, quantifying materiality, identifying root cause, following fund error policy, client communication, correction entries, investor impact, and prevention of recurrence. Question 14. How do you prioritize work when several funds have NAV deadlines on the same day? I start by mapping deadlines, deliverables, and dependencies for each fund. Anything blocking NAV, such as unresolved reconciliations, missing prices, or pending client approvals, gets priority. I use checklists to track status and communicate early if there is a risk to delivery. I also avoid sacrificing review quality just to move fast. In fund administration, prioritization means knowing what is time-critical, what is material, and who needs to be informed. Make sure to cover deadline mapping, materiality, dependency tracking, communication with reviewers, early escalation, checklist discipline, and balancing speed with accuracy. Give a practical operations-focused answer. Question 15. Tell me about a time you had to work with another team to resolve an operational issue. In a previous role, I found a recurring reconciliation break caused by trade files arriving with incomplete settlement details. I coordinated with operations, technology, and the broker contact to trace the issue. We created a validation check before upload and agreed on an escalation process for exceptions. The breaks reduced significantly, and month-end review became faster. The lesson I would bring to MUFG is to own the issue, involve the right people, and prevent repeat errors. In your answer, use a STAR structure and emphasize collaboration, ownership, communication, root cause analysis, and client impact. Choose an example involving reconciliations, reporting, deadlines, or process improvement. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.